Welcome to Chapter 1 homework video. We're going to show you a little bit about Connect, how it works, everything right here. Depending on which class you're currently in, you may only have Chapter 1 show. If you're in an 8-week, you may have Chapter 1 and 2. 3-week, you may have the whole unit. If you're in a day class, I may actually have everything up already. It just depends. But mostly we're going to focus on Chapter 1. So this is how Connect looks once you have registered and have joined the class. You're going to see you're going to see the assignment name, you're going to see the start date, and you're going to see the due date. Pay attention to the due dates. Even though these are found on the calendar, they're here on Connect also. These may change. It's just a passion of how the course goes. But we'll show you over here. And then of course, over here in the drop down menu, you have basically your account information. Do not send any messages through here. I will not get them. I'll be honest on that. Just doesn't work with us on Connect. So if you're going to message, send me an email, or you can even give me a phone call. I'll send you one of those. Here is the to-do list. This will actually say what is due in the next 7 days. You have your calendar. This will actually put what's due, where it is. As the course goes, I will probably have this more filled in as we keep going. This will actually show you what classes you have. Currently it's only going to be Accounting 2301. You got results, so you can actually see how well you're doing. So I will tell you this, I want you to get 100% on every homework assignment, because I know y'all are already so awesome that y'all are going to do it. But keep an eye out, okay? So first thing you do, just hit the arrow. Now you can actually go, if I go into Blackboard, and as you can see, I got tons of classes, but we'll go to Principles of Financial Accounting, which this is the class, and you go to your course content. Right here in course content, in Chapter 1, you're going to notice these two. So for y'all can see these, and if you click on here, it will direct you right to Connect's website, and you can actually access the homework that way. I would suggest to do this the first time, is to go through, either do the quiz or the homework, so that Connect can properly sync your grades to Blackboard. I will keep an eye on, if I don't see them syncing, I will probably tell you need to do this just so that they can sync. Also, you're going to be using your Sanjack email. Use your Sanjack email, it will help it sync a lot easier. Okay? Back to this. Once you hit the arrow, if you're in the Magrav website, it'll say begin. If you're on here and you click Chapter 1 homework, or again, I'll tell you, it will go immediately to us. Again, it will tell you right here, and boom. This is what you're going to end up seeing. Same thing over here. Notice that they're the same. So notice also, this will tell you how many points are available. Again, it will tell you the due date. It will also tell you how many tries you have. For homework, you have unlimited, so there should be no excuse getting 100 on them. On quizzes and exams, you have 3, only 3, so be careful on those. So we're going to hit start. Now, here in Connect, you're going to see here's the ebook. You can actually go to the book. You have references on these. Some will actually have hints, and will show you an actual video when you go through it. But usually the first few, we do have little videos. I would strongly encourage you to watch these just because it will help you out with the homework. So I'm going to skip through these because that's just how they are. So your first question is going to be question number 6. Now, question number 6 basically wants you to identify if the users are going to be external or internal. Again, they're trying Connect wants you to see if you can understand financial accounting, which we're going to get into, or if they're going to be managerial accounting 2302, they're going to focus right there. So remember, if they are not internally in the company, they're going to be our externals. So again, customers, government, investors, those kind of things. So with Connect, you would actually go down, and for this drop down, you either have E or I for external and internal. Voters, they're kind of like your stockholders. They should be external. And if you have questions, you can always go right here to check my work. So if I hit check my work, since I have plenty of blanks, Connect will always tell you answer is not complete. Next thing it's going to say is if you answered it correctly, it will have a green check mark. And you can hit return question and keep going. Here, like if I said that the CFO was an external user and I hit check my work, notice that it will tell it is wrong. These questions are a little bit easier, I will tell you that, because you can go check my work, fix the ones because you got 50-50. But don't do that. Mostly I want you to actually understand why. And of course, CFOs are management. Now, you may be looking at your basically Connect and noticing that it has different names, different people, because mine is never going to be the same. It's going to have different numbers, but the principle is still going to be the same. So always watch out on that. So budget officers, external auditors, they're external. So basically with this question, you just want to go down the list and determine if they're internal or external. Now again, when I go through these homeworks, I'm not going to complete if there's something like this, or if it's the same thing. I'm probably not going to end up doing it because there is some things I gotta see if you actually understand the material. So once you have completed it and you've checked your work, it says it's 100% down the list, go to the next question. Now you can go next, you can go previous, you can go back, which usually going back is awesome because you may have answered it in one question and then it rewards it in another. You can just go back and see what you put. And again, you can click the grid. The grid will actually tell you if something's incomplete, if you've answered, and all that fun jazz. And you'll actually see something like a link. If there's a link between questions, that means it uses the same information. Okay? So, onward to question 7. Alright, so identify the following terms, phrases, and if they're the principle, assumption, and constraint. Now, if you have your notes open, you will see that on there what these are. Of course, monetary units is an assumption, benefits exceed cost is a constraint, measurement, that is principle, growing concern is an assumption. Now, right here, again, drop down menu, check my work, boom. So you want to keep an eye out. A lot of this is going to be reflected on the notes, which is great. So notes will reflect, and if you watch the video that's posted in Blackboard, great job. We'll get you, it may actually also help with you. Again, you can pause, you can go through, and basically they want you to really go through and just kind of answer the questions. Notice that these are just starting off. So complete the following table with either yes or no regarding the attributes of proprietorships, partnerships, and corporations. Now, this one is going to be right in the graphic that we had right near the end of the chapter. Again, the program I'm using doesn't let me switch to the notes and then to the actual quiz. To back and forth through windows, which is okay, I guess. But so check your notes. Again, ebook will also have it, so you can go click the ebook. Here's the ebook. Click Fundamentals of Accounting. Boom, it pops up slowly, and look, it goes right to page 17. No, and as you can see, the book itself has everything that you need to see. Has stuff from our notes, and of course it will actually tell you here they are. Boom. And then see, even right here, there you go, you can actually answer it from right there. Attributes of a business. So if I look at partnerships, no. Corporations is probably yes on everything. Go to my homework. I'm going to end up already know that all these are yeses, because a corporation does have unlimited life, lives forever, is taxed, is a legal entity, yes. Partnerships are not taxed. They are taxed on the individual level. Will they have an ultimate life? Let's see. Partnerships. They are a business entity. Limited. Ultimate life. No, no. One owner allowed is only for that. So we can always figure out our yeses. Everything else is a no. So, no. Legal entity. No. So this is how you really can do the homework. It's actually pretty easy with this part. On these kind of questions, because all you have to do is find it. So there we go. Alright, next part. Identify items with financial statements. Okay, so this one states indicate in which financial statements each item would most likely appear by selecting income statement, balance sheet, statement of retained earnings, or cash from operating activities, cash flow. Alright, so this one may get a little bit tricky. First off, we have retained revenue. Notice that one, we have E and CF. We have CF, B, and I. Revenue is usually on the income statement. Again, formula is revenue minus expenses equals net income. Furniture, this one is actually an asset. It's something that we can own. Dividends. Now, this one's going to be a little bit of a tricky one. This one does show on cash flow statement, and it does show from on our equity, basically our retained earnings. Since there's only one that has that, that's going to be it. Salaries expense, income statement, supplies expense. Again, if you see expense, that's a big keyword to say that's going to be on the income statement. Land we can own, so most likely we'll see that on the balance sheet. Payable, again, keyword here is payable, means we owe somebody, and that's most likely going to be a liability. And again, utilities expense, we see expense. Again, you're going to see different items. If you have questions on these, you are more than welcome to send me emails. I will be here. I will respond as quickly as I can to get you ready to go. Okay? Again, I just like you to check my work. So, boom, check, return the question, hit next. Now we're on to number 10. Number 10 is going to do the same thing, but it's going to ask you which ones are expenses, revenue, or dividends. Well, they're going to put any withdrawal as basically a dividend, but you see, they're putting this as connect, they change it up. They're considering dividends and withdrawals the same thing. They're interchanging those terms. So of course, since it says withdrawal, well, knock out what these questions, knock out the easy ones. Anything that I see expense, I already know has to be expense. If I see revenue, I see something paid, expense. And advertising, we pay for expenses. We got revenue. And conveyance, I don't usually see that word too much, but that is also an expense. Usually, most likely, 9 times out of 10, it's going to be an expense if it's just a name by itself, especially with Connect. But if you see paid or expense itself, that's good. The only time it's going to be a dividend if it's an owner's withdrawal or actually say dividends. Boom. That's easy. It's either going to be a revenue or expense. And as accounts, we keep revenue basically with the name so we can classify that revenue. So next, again, question 11. Again, wants to now identify if it's an asset, liability, or equity. Again, so we're going to ask, do we own it? Do we owe it? Or is it something that we've paid out to the owner or the owner owns? So, computer equipment. It's equipment. The business itself is going to own the equipment. So, that's an asset. Payables. Anytime we see a payable, we owe somebody. Keyword is pay. So, that's a liability. Again, equipment, asset, common stock. Again, if you look at your notes, you'll notice common stock is an equity account. That's something that the owner owns for putting in money into the company. Then you got payables, again, and another payable, boom. Some of these we'll get into a lot more often, but we don't really have to get into too heavily. Okay? But a lot of these in later chapters you're going to see, and they're going to be fun. We're going to get through them and keep moving on. So, you're going to see I'm going to say that a lot. Question number 12. Now wants to say, in recent years, financial statements, Home Depot reported the following results. So, we're going to do return on assets. The best thing to do on this one is to go look at the notes, find the formula, because that's what they want you to put. One, we know, if you know the formula, it's going to be net income divided by average total assets. So, for this one, all you got to do is put in the numbers. So, if my net income was 4,188 and my average total assets were 42,201, that says my return on assets was 9.9%. Woo! We're more closer to zero than actual 100%, but hey, it's getting there. So, again, it's not doing too bad, still doing good. We're actually getting a decent amount of income. Home Depot's rocking it. Way to go, Home Depot. But again, check your work. This one's a little bit simpler. Put in question. Go to number 13. Now look at this with number 13. If you notice over here on this side, you see now the hint button. So if you click hint, it will pop up a video to actually explain through it too. So you can actually
Swiss
watch
Group
it,
reports net income of $70,000 for the current.
And it'll actually answer the whole question. Yay! Fun stuff. Okay. So exit out of here. So with this, we're going to look at Swiss Group reports net income of $28,000 for 2017. At the beginning of 2017, Swiss Group had $138,000 in assets. By the end of 2017, assets have grown to $188,000. Again, I can't pop up any other web thing, so we're going to actually go through this. I'm going to explain it right here. So again, we're going to go through the formula itself. So we know it's net income divided by average total assets. So for us, it's like going to be 138,123 plus 188,123 and divide it's not going to actually show me, but divide that by 2. That will give you your average. So with that being said, for me, I'm on have my calculator. 138,123 divided by 188. And divide by 2. So if you did that, and if you're following along with the video, you're gonna always have these kind of like errors because I put that division sign in. Welcome to Connect. So if you did that correctly, you should have about 163,000. Net income again is 28,123, and it should be 17.2%. I will find later this semester, if I can find a better program, I'll get a better program that lets me put a little window here, because it's not letting me draw, which it did. So, but we will get something better to actually go through the actual math part of these questions. So here I can show it like this. So basically, make sure what beginning and ending, you just add them together, divide by 2, boom, and fill it in right here. That's the way Connect wants it. And of course, it will explain. If you need to explain, hit hint, and it will work out for you. So now we hit what question 14, 15, and I think 16. These are having you actually do financial statements. So you may want to look into the notes at the examples to see what they have. So with Connect, again, the first one is going to be the income statement. Questions are all going to use the same information up here. So for the income statement, it's always going to be 4 month ended, 4 year ended. Make sure you always do that. It'll work out for you. And we always start out with our revenue. Now you're going to probably see me go back and forth up here if it messes up on me. But we want to find our revenues. So look in here. They kind of got sort of organized. But we see this revenue. And that's it. No more revenues. Sweet. So we only have one revenue. So with this, you can actually type in revenue, put consulting, and then type in however much it is. Notice Connect is going to fill in some blanks. But also notice that there's a couple of blanks. Connect likes to do this. It likes to mess with you. So always check for your understanding. Realize that we only have revenues, and then we're going to have expenses. Again, hint button right here, our ebook will both help you out. So expenses, we'll have the rent, That's 4190. Salaries is 7570. Telephone, we have 830, and then miscellaneous expenses, we have 650. Okay, remember this again, income statement, only revenue and expenses, only. If it's not revenue or expense, we keep it aside. Okay, so this will be our net income, because I can tell our revenues outweigh our expenses. If it's the other way around, it would actually be net loss. But since I can already tell that, it's going to be that. And next, all we have to do is basically subtract the two. So if I took 1600 minus my 13240, I should have 2760. And again, hit check my work. Boom. There we go. Turn to the question. Alright, so keep an eye on that, because I bet we're going to use it in the next part. So 15. Now we're doing our statement of retained earnings. So statement of retained earnings. Again, this is going to have as of. It's a specific date for statement of retained earnings. So this one is 0, since we started the company, will be our beginning retained earnings. So since we're only doing the month of October, since we started on October, we can only do retained earnings October 1st. Sometimes you'll have January 1st or ending December 31st. But because it only has a date, this is the same thing as beginning retained earnings. Okay? Notice that if you search beginning, it's not going to find it. Next, we're going to add in our net income. So let's go back to our income statement. Notice that it was 2,760 and we verified it. So here we're going to put 2,760. Boom. And then we always subtract out dividends. Dividends are withdrawals. So here cash dividends was 2,650. And this is going to be my ending retained earnings. So best thing is search for retained earnings. There it is. And it's always going to be the last day of the month. It's going to match whatever date's up here. Okay. And then we just take the difference. That looks like, what, 110. So just follow along. Add less. Check. Oh, we got something wrong. Apparently Connect wants to do it for the month ended. That's fine and dandy. It's not going to affect me any, and it usually doesn't affect the statements. So just do it the way Connect says for the month ending. Who knows? So again, check my work, and there you go. So for month ending October 31st. Yay! So answer is complete. We move on to the next phase, which is 16, and it's the balance sheet. So balance sheet is definitely as of October 31st. So if you want to check, boom. It's always good to check. So left side is always going to be your assets. Right side is always going to be your liabilities. And then equity. And all we do is piece them together. Okay, so we've already used all these on this side. So all we got left is right here. And the first thing I want you to do is actually put the accounts in. So we know cash is an asset. We own cash. Accounts receivable, we own that because that's clients that owe us money. So they're going to give us money. Office supplies. And if you start to notice, they're basically in order. So land. And then office equipment. And right here we have accounts payable. because that's a liability. We owe people. We have to pay them. Again, pay is the key term. Then we have common stock and our equity because the owner owns that. And then here's the last one. Don't forget about retained earnings. That's going to come in handy. Okay? And then fill in the amounts. 9390. 1600. Office supplies was 3830 for me. 45980 for land. Ooh, they bought a lot of land. 18550. Boom. Notice Connect is also calculating it all out. And of course, this is our total assets. Okay. Don't forget those. Those are commonly missed, and you'll be going, why is it blank? Account payable, we have 9060. Common stock is 84580. Now notice this, if you forgot retained earnings, notice what I'm missing. Are they in balance? They are not. This will tell you that you need another account over here because you pulled the numbers right. And that's just retained earnings. So if I go back to question 15, notice that right here it's 110. So we go 110. And boom, it is balanced out. But we have a number right here. We have a number right here. We need to label those. So this is going to be total equity since it's adding two accounts. If accounts payable and another payable was right here, most likely it will have total liabilities also, but it doesn't. And then we're going to find total liabilities equity. Notice again that they balance. They balance, we're good. We're probably got everything correct. So if I hit check my work, there we go. Okay. So, question number 7 is basically finding the missing. Okay, so again, you got the hint, you got the ebook. This is just basically they give you the formula, and you just gotta use basic algebra. So, if I know liabilities plus equity equals assets, if I have one, don't have the other, all I have to do is basically get liabilities by itself. So take equity, subtract it from the assets, minus 4600 should be 41. And there we go. And then you're going to just do that with the other two. So again, add those two together. Boom. Take this, subtract to that, and it should end up coming out perfectly. Here, use the expanded accounting equation to compute the missing financial amounts. Right, again, we have the assets, so basically it's working backwards. Take your liabilities, subtract that, take common stock, since it's a plus, subtract, so you have 64,000 minus 22,000 minus 32,000. Notice that I'm just doing the opposite signs, if you want to think of it that way. We have no dividends, but since it's negative, you add 0. We don't know what the revenues are, so we leave that the way it is. We actually subtract expenses, so that's a minus. Do the opposite, add 14. So it should state that revenue should be 2,400. Check my work. Boom. And just do number 2. Yay. Again, numbers will change, but that's basically what it is. If we already have the assets, if we already have them, all you're going to do is the opposite sign. So to find the missing link. If we don't have assets, just add the two. Simple operation. Same thing here. Again, just do the opposite. So if it's positive, do a negative to the assets. So subtract it from assets. If it's negative, add it to the assets. And you should have it good. Alright, so question 18. This is the fun one. This is the one that's like the workout problem that we did in the notes, except it's expanded to the expanded one. So again, it's just knowing what the account is. So for this, we have G. Graham invested $45,000 cash in the company in exchange for its common stock. So I just read that up here. So again, it already tells you common stock, cash. So since now we owe whoever it is, G. Graham, the 4,500, put 4,500 here, 4,500 here. Notice I don't have to put zeros in anything else. We just put it there. And again, if you want to go through each one, just hit check my work to see if you're on the right path, or you can just do it all and then do it. That's up to you. However you want to like to go. Okay. Next, the company rented a furnished office and paid $2,500 cash for May's rent. Okay, so we rented an office. So again, we paid cash. So we lost money there. Notice that connect will put in the parentheses, but all you have to do is put negative. But here, since this is already a subtract, a negative right here, you shouldn't have to actually put it. So check my work. There you go. This is the only thing that kind of will be confusing from the actual practice problem, is that one will be positive, and that's just because it's already being subtracted out. Okay, here we know we're losing cash, so cash is basically going down. It's going out. We lose an ownership of it because it's now owned by the rent company. But why did we do it? We find out that it's for rent. So we're going to keep, basically all you do is keep going through. Notice it's adding all these up down here. So again, if you want to also keep an accurate balance, you can. So question 3, the company purchased $1,890 of office equipment on credit. Now again, if it says on credit, it's like buying it with a credit card. So if you're buying anything on a credit card, you definitely know you're going to owe somebody. So with that, it's going to increase the accounts payable. And it's going to increase our office equipment because we used office equipment. So we got ownership of office equipment for being on credit. Okay. Next one, we notice we paid cash. So we know we're paying cash. We know cash is going down. Why is it going down? Well, it's for cleaning services. So that's an expense. So that increases. Again, expenses, because they're already being subtracted, you can put a positive number. Here you have to put the negative number. Okay. 8, company provide consulting service for a client and immediately collected. So since we immediately collected, we've got cash. And since we earned, or we done a service, that's a revenue. 12, company provided $2,700 of consulting service for a client on credit. Okay, so we've earned our $2,700, but did the client pay us? They did not. So this is going to be accounts receivable of $2,700. So again, after every while, you always want to go check my work and make sure you're always going. So keep going. We paid salary. So again, I'm going to skip some of these since we kind of already done them. So remember, paid, cash is going down. This is salary. We paid someone, so we have an expense. We don't owe anybody. We actually paid them. So that's a big key thing. Company received $27,000 cash payments for services provided. So we actually received the cash now on the 20th. So since we received the cash, this goes down. this must go up. Okay, so that's going just. Alright, so cash goes up, accounts receivable goes down because we actually got our money back finally. Then the company provide $3,800 of consulting service on credit, so that's a repeat of what happened on the 12th. 25th, the company received $3,800, so there's the repeat 20th on the 25th. Company paid $1,890 cash for office equipment purchased on May 3rd. Okay, so since it's related to a credit or a previous transaction, this means that we paid our accounts payable. So this was on the 26th. So that goes down. And then this is also going down because we paid out cash. So that should be down to 0 now. This one will have a balance because these two transactions repeat, just different numbers. Company purchased $80 of advertising this month. Cash payment is due June 1st. Alright, so this one, we've actually bought advertising, but it's due, so it's an unpaid bill. So this one would be like $80 here, $80 here, and make sure Connect is actually saying that they are, because sometimes Connect wants to do a little bit different than what the real world does. So company ends up paid $720 cash for, okay, there's our payroll again. So same thing as on the 15th date. Company paid $350 cash for this month's telephone bill. Again, that's an expense, so it's going to repeat as any of the other expenses. The company paid $290 cash for this month's utilities. Again, there we go. 31st is the one that I want to look at. So we paid $1,800 cash in dividends to the owner. So when we do that, again, cash is going out of $1,800, but since it's dividends, and again, notice that's already negative, we just put $1,800, boom, check my work, and you should be done. Okay, biggest thing on this one is just to recognize what's happening with the accounts. This is the hardest part of accounting, is to recognize what's going on. So physically, what am I doing? So if someone's giving me cash and I just give them common stock, well, those are their accounts. I receive it. The business owns that money. If I pay out, I'm losing the money. So my money's going down. So these are like regular transactions you do for any bills when you want to focus that. If I pay my rent every month, well, I lose out money. Money's going out of my bank account. It's why did it go out? Well, it paid rent. Rent is an expense to me. So that's how this is going. Is once you just get the basic idea of what's going on in the accounting equation. Okay, so that's basically a run through of the homework for chapter 1. And if you have any questions, please email me or give me a call during my office hours, and we'll get you going. Okay.